So we're quickly doing the last part of this cash flow, right? And so I was saying that if you were to do a full cash flow, if they asked you for a full cash flow statement, your order would look something like this, right? So now they've asked you to calculate the bank account balance at the end, right? So they've given you this information over here, which is our cash flow from investing activities. Where's our note? Over here. They tell you it's 1278420 investing, and it's an inflow. 1278420. So let's go put that in.
7,420.
So it's 1278420.
278,420.
Okay. Then let's quickly go get our investing. They said it's 176,000 and it's also an inflow. Sorry, financing.
Yeah,
Financing 176,000. And then our investing, we do not know, but we calculated it over here and it was 113,900, right? In brackets, it was an outflow. Okay. And then now we need to deal with so now we know kind of like what happens with our cash flow, right? But now we need to deal with our beginning to find out what our end balance is. What happened at the beginning? What did they tell you? They told us that we had a credit balance. So it's a minus of 814,520. But we also had a petty cash of 14. So if you had to net that off, do you agree with me? It would be 814,520 minus 14,000. So it would be a minus, do you agree, of 520.
Yes.
Okay. So then we can go and put that in. So that would be at the beginning, would be 800,520. What was this total up for me?
127,840 minus 113900 plus 176,123 134,0520.
Good. And then minus the beginning amount.
Minus 800,520. 540,000.
Okay. And then we can't stop there because although we don't know what this balance is, we do know that we have a petty cash of 12,000, right?
Mm-hmm.
So what must I do? That is at the end of the year.
The end of the year. Mm-hmm. At the end of the year. So that was the beginning of the year.
Mm-hmm.
So at the end of the year, do we minus it? Plus
After minus it? Can I minus it?
At the end of the year. Minus it.
Why?
Bank balance. I don't know.
Well, you said minus it.
I think I just said minus it because it was at the end of the year. So you take the opening minus at the end of the year. I just guessed.
So it's because it's a closing balance.
Okay, yeah, that's what I was kind of thinking.
Right, because opening we added, so closing we minus, right?
Mm-hmm.
Okay. Because we did remember we added the opening balance, so the closing balance is a minus, correct?
Yes.
So we're gonna say minus. Where is it now? Yeah, 12,000. And what does that give you? 540. Calculate it for us quickly.
12,000
Our closing
is
petty cash.
500,000.
528,000.
And
And that would be our bank account. balance. Let's go check ourselves. 528,000. Do we agree or do we not agree? Do they agree or do they not agree? What number was it even?
I think,
okay.
yeah.
They agree. Cool. And you are comfortable that it's a favorable balance, right? Because remember, when
Yes.
you minus this, we had a positive already. So this would be favorable. All right. Let's go back. I didn't say I want to cancel anything. Oh, discard. What did I just do? I don't know what just happened. It literally, yeah. Anyway, I wanna open up the presentation again. Just give me 1 second to open it up again. Okay. Let me just share my screen. Oh, it is shared. Is it shared?
No.
Okay. Okay, so I just want us to review the question and then that will be it. And then I think the next lesson, the IEB papers that I choose, I will try and choose the ones that didn't cover certain things here, like dividends wasn't covered here, shareholders for dividends. So I'll just try and find a paper that will then cover other elements of this paper that wasn't covered, so that then you have a, cash flow info sorted. Okay, so let's quickly go and check what was the important things to remember from this paper. The first one was our calculation of our before tax. They told us that it was, let me just turn on my pen. They told us that tax was at 30%. So we said that it's important to remember that we are wanting 100%. And over what we currently have, we had an after-tax figure, which was, sorry, I'm on the wrong page. So 30% was tax, and we had an after-tax figure of 70. So we wanted 100. So 100, what we want, over what we have, times what we have, and that gave us our figure. Okay? Then over here, we're adjusting for non-cash items. So we could have also had interest income as part of this. Okay. And obviously we do the inverse. So if they were minus, we add them. If they were added, we minus them. Then I wanted you to remember your T account when calculating our interest expense, because we had an interest, which was our liability account, but we also had an interest, which was our income expense account. Interest was paid. We said it would mean that our bank would decrease, and therefore our liability would decrease. Then we said that if we had an accrued interest, it would mean that it would be owing, right? And the one from last year would be on the debit. And then we balanced it out to get this figure. Remember that? Okay.
Yep.
Then we said that when we talk about inventory, we said that if it increases, it means we bought. And if it decreases, it means we didn't buy. If it increases, so it's an outflow. If it decreases, it means it's an inflow. Correct?
Yep.
Okay. Then we say our debtors. We said if our debtors decrease, it means they paid us, which is an inflow. And we said that if it increases, it means they didn't pay us, which is an outflow. Okay. And when it comes to payables, we said if our payables decrease, it means that we paid,
which is an
outflow. And therefore, if it increases, it will be an inflow. Okay. All right. Then we came to our investing activities. We purchased an asset, was given to us, the purchase price. So obviously, money lost. It went out of our bank account, so it's an outflow. Not lost physically, but I mean as in it went out of our bank account. And we said that if we sell the proceeds, our selling price, the proceeds would be an inflow because we sold. Money comes in. So money in. Okay. And then we looked at our investments. They said our investments decreased. So it's almost like we sold our investment and the difference was an inflow. If we sold, it's an inflow. And if we had purchased investments,
it would be an outflow.
It would be an outflow. Okay. Then they told us
Yep.
to determine the value of our new loan. We said that when there is a new loan, we do not do T accounts because we're going to get it wrong. We need to use our table formula, which is what was our opening balance of our loan? What did we repay in our loan? What did we add on to our loan, which would obviously be a positive, and that will give us our closing balance of our loan, which in this case, we can work backwards to solve for X, which is the added part.
Yep.
Cool. Then we had our tax paid, which we said we must use our formula. Our formula was our opening. Let's just quickly go back. What was the formula? Where are we? Why do I look lost? We just did it now, 3 point. Oh, wow, it didn't save. No, it will save in the video, but I'm just saying in the presentation, it didn't save. You wrote it down, right? If you didn't, I can quickly get it. Okay,
it was amount owing. Yeah, I have amount owing, and then
amount
it was
owing, and I think it was a prior year, right?
Yes.
Income, tax, expense, right?
Mm.
Then it was amounts owing at the end of the year, and then I think that gave you your tax paid.
Yep.
Okay. Then our shareholders, this was just one of those weird questions where we kind of had to solve the puzzle because we needed to find out how much was the total amount paid for the repurchase. Cool. Then we had our bank account. So we said we must just use if we had to do a full cash flow, we would have had cash flow from operating, you would have had cash flow from investing, you would have had cash flow from financing, and then you would have had the total for that. Then you would have your net changes, right? Which is your bank at the beginning and bank at begin, and then you would have your bank at end. Taking into account cash floats and petty cash. Cool. And just to be careful with your bank balance, just check whether it's a debit or a credit. And then at the end, also, once you've finished and calculated what your bank account balance is, just to take note whether it's favorable or unfavorable. Was it positive or is it an overdraft?